Joining me now is Phil Green, Chairman and CEO of Cullen Frost Bankers. Thank you so much for joining us here. You know, I understand you're located in Texas, and sometimes Texas can sort of operate in different ways than different areas of the country. So can you explain to us, with real estate, of course, we know is very local, what is going on when it comes to mortgage lending for you all?
Well, thanks for having me, Courtney. It's great to be with you here today. You know, it's interesting to see what's happening with mortgage lending. As you mentioned, we've had really great activity going into the quarter, and one of the things that's happened is that rates have reached an inflection point, I think, where we're seeing people not only buying new homes, but almost half of our activity is from refi activity today. You're getting people that were in those ARMs before that are starting to come to maturity, and you're seeing that rate change. And if you see a 5 handle on rates, we've got a 575, for example, on the conventional mortgage, you're getting people take that rate. So we're starting to see that happen. As rates have come down, people are taking advantage of that for refis and also purchases. We're also seeing that in the home equity lending as well.
What about sort of other areas of investment in lending that your bank deals with? What is the Texas consumer feeling right now when it comes to making bigger investments, maybe beyond the home?
You know, I think that there's a bifurcation with regard to the consumer today. I think the middle to low income segment of the consumer is really careful today, continue to be careful. They're spending on core, but they are being really careful on some of the discretionary items. When you look at the high income consumer, we're still seeing good activity from them, good activity in automobile purchases and those kinds of things. So it is a bifurcated market today.
So you talked before about when you see potentially a 5 handle on mortgage rates, like a 5 3/4, that maybe that changes things. Right. What are your expectations, or the bank's expectations, for where rates will be, say, over the course of the next year? I know obviously some central bankers are hoping for bigger cuts, while others still aren't sure because of the lack of data that we have right now with the government shutdown. What is your expectations for where rates will be, and then how are you operating your business as a result?
Well, you know, I wish I knew exactly, and I'd be making a lot of money right now. But I think that we're expecting for the Fed to continue to respond to what's going on in the economy as they see it. And you're right, we don't have quite as many data points. But I think one of the things that they responded to before, and I think one thing that businesses are hoping they respond to, is there's a little bit of developing softness in the labor market. And I think, you know, as I said before, asset prices are one thing, but when you're dealing with labor, you're dealing with people, you're dealing with families. And so hopefully we'll see them respond to that and follow along as they see the economy slowing, lowering rates.
You know, there's been some consolidation in the regional bank space. Where do you all sit with that?
Well, we're innocent bystanders.
Okay.
We are seeing it happen. It's not something that we're interested in. We are growing organically. In fact, we've increased our number of physical locations by 50% over the last 5 years in great Texas markets. So that's really how we've chosen to address expansion, is doing it organically. But, you know, I'm only half kidding when I say we're bystanders, because dislocations happen when mergers happen.
Right.
And we want to be ready to take advantage of those customers who might feel like they're disenfranchised, or they may be ready for a change. And frankly, some of those bankers that might feel the same way. So we're keeping a sharp eye out for that.